So yesterday we were told we're not in a recession, and
to build a little bit on what Steve was asking, do you believe the United States is currently in a recession? Will the GDP reading tomorrow affect that judgment one way or the other? And has your assessment of the risk of recession changed any in recent weeks?
So I do not think the U.S. is currently in a recession. And the reason is there are just too many areas of the economy that are performing, too well. And of course, I would point to the labor market.
we're not going to be in a recession. Then we get the GDP number and it's negative, which they said it wasn't going to be negative. Now they're saying we have the negative number, but we're not in a recession because of, Check out what I just watched on CNBC, and then let's come back and really do some fact checking.
Get your immediate reaction to this and really the larger debate. Are we now in a recession, my friend?
I'm not going to say we're in a recession, in part because I wouldn't count it from the first quarter. I might begin counting it in the second quarter if you want to do the 2 quarters of negative growth thing, which is this common definition that's out there. I have a problem given how strong the job market was, and maybe still is.
Okay, so we have negative GDP in the first quarter, but you don't like that number and you don't agree with it. So another number comes out and maybe that's going to be revised, but the job market is fantastic. Well, nobody talks about yield curve. So let's talk about 3 things that signal a recession. Well, that's what I've always been taught, and I have a degree in economics. So negative GDP in 2 quarters. The jobs numbers, everybody says is robust, but are they really? And then the yield curve, is it inverted? So let's go over all 3 of these items, then you decide, because I'm stumped. The first piece of this puzzle is negative GDP. Well, you can't really argue it because the numbers just came out. Here was quarter 1, negative 1.6, and here's quarter 2, negative 9. So they're going to come in, well, this is going to get revised and revised. I don't think it's going to get revised all the way back to a positive number, but you never know. It is an election year. Okay, so that's number 1. We know the GDP is negative. Then let's go over to the next thing. Here's another chart just to validate for you guys that it is the facts, and you heard it all over the media today. But let's go over something interesting here. Here's the jobs numbers. So let's just go back all the way from the start 10 years ago. If you look at these numbers, you see every year these numbers go up, and you can see it right through here. It starts at 143, then it goes to 146, then 148, then 141, then 151, then 153. So it's about 2 million jobs added every year. Okay, so you'd have to agree with me on that one. Okay, so we go through here. Then all of a sudden we drop off a cliff. But let's just say this didn't happen, okay? Because what I'm trying to do is, where is the job markets right now? Really? Okay, so let's go back. All these previous years, there was about 2 million jobs created every year. All right, then you get to here and we fell off a cliff. But let's say that didn't happen. So right here, this would put us at 159 for this year. Okay, you follow me? That's 2 million plus the 157, so 159. And then 161, then 163, then 165 is where we should be if historical numbers kind of the trend kept. Where are we? Well, we're quite a bit lower than where we should be. So the jobs numbers don't really pan out because, yes, they're coming back, but we're not even close to where we should be, okay? So that's the other piece of this puzzle. Then let's go to one other thing. Let's go to the yield curve. Is it inverted? Well, we start out with the 1 year or 1 month. Yields is 2.1. Then we go to a 1 year, it's 2.9. So that chart's going up. Nice little chart going, or arrows going up. Wait a second, then 2 year yield goes to 2.8. So lower than this. So it goes up from here, then down, down, down. Wouldn't that be kind of an inverted yield curve? Okay, so when you talk about the 3 main pieces of a puzzle of a recession, isn't this validating all that stuff? So what I want you to do is I want you to think for yourselves, okay? Because we talk about on this channel, we talk about housing and interest rates and everything else, but all this ties into the economic data that we have. What's going on with home prices and what's going to go on with interest rates. But it's odd to see, even CNBC kind of selling into this data that, well, now I don't know if we're in a recession because Q1, it just didn't like it. And you're going to see this is the agenda now. The jobs market is robust. Well, I just proved to you that. And then now you're not hearing anything about the inverted yield curve because that doesn't fit the agenda. So guys, you make the decision on what I just provided you. We have negative GDP, 2 quarters. We do not have a strong jobs market. It just is what it is. I just showed you those numbers. And the inverted yield curve, that's another sign that we've always hear about. I just proved that. So how are these guys still saying that I still don't think we're in a recession? Okay, wake up, because 6 months from now, how do I know this when you guys miss this so bad and you're making millions of dollars on media? So I don't know, but that's my news for today. We are in a recession. It will be validated 6 or 8 months from now, but the little curveball in this, and I hate playing this card, is it is an election year. So politics do play a big role in this, and thank goodness for Citizens United that made bribing your politicians legal. So let's get over to where mortgage rates are. So based on all this information, you would think, what's going on with rates? They keep getting better, okay? So the one good piece of this puzzle is in a normal recession, you see rates coming down on average about 1 full percent. Are we seeing that now? So this chart right here, if you're new to my channel, what I follow to follow the mortgage rates basically tick by tick, minute by minute, I follow what's happening to the price of the bond. So here's what happens is, what everybody does is what we do as a mortgage companies, we bundle up all these loans into a big package. We sell that package off on Wall Street as a bond, okay? This is the bond that it gets sold into. That's in its simplest forms, okay? So what we focus in on here is what's going on with the price of the bond. So today we see the price going up 0.64. What does that mean for rates? Well, this has an inverse relationship with the mortgage rates. So as this goes up, the price of a bond goes up, the yield goes down. Okay, let me make this for sense for you, for the newbies out there. Let's say, for example, let me do an analysis, is I have this mortgage-backed security bond, and next year at maturity, it comes and I get $100 back. That's the coupon of it. So when I turn in that bond a year from now, I get $100, okay? Well, let me show you how as the price goes up, the yields come down. Okay, so for today, I pay you $50 for that bond. So I give you $50. A year from now, I turn in my bond and you give me $100 back. What's my rate of return? What's my yield? It's 100%. I doubled my money, okay? So now let's say the price goes up. Let's do an extreme version of this. I pay you $100 today, a higher price, and next year when I give you my coupon, you give me $100 back. You're saying, Dan, you didn't do anything. You didn't have any yield. You didn't have any rate of return. Exactly. So as the price goes up, my yield or my return on my investment goes down. Okay, so that's why we love when the prices go up, because it drives down the yields. You can see, look at the bottom of the chart down there. Ever since we kind of started teetering on, is there a recession? Look what you've seen. You've seen now over 0.75% reduction in mortgage rates. And I'm going to show you that right here. Here's what's going on with mortgage rates. These are mortgage rates published by Mortgage News Daily. They give us the 6 biggest products out there on what the rate would be in this scenario. So what Mortgage News Daily is, they survey mortgage lenders all over the country and they say, hey, if we had this client, he or she or them or whatever is buying a $500,000 home. Okay, that's this scenario right on your screen. $500,000 purchase. They have a 740 credit score. They're putting 20% down and it's a single family home. What would your rate be? And mortgage lenders flood them with the data. And here's the data I want to share with you. So this is the national average in that scenario. It is not your scenario. That could be exactly your scenario. I would doubt it, but it could be. So here's probably where your rate's going to be. What I also focus in on what the change is from the previous day. Okay, so if you talk to a mortgage advisor, hopefully you spoke with us and we quoted your rate, then today the difference would be, well, in this case, really nothing. Okay, but you can see what the changes from the day before. All right, but the interesting thing is down through here. Look where rates were over the last year. We were down all the way to 2.78. Then we went up all the way to 6.28. Okay, so look at it. We're 0.75% lower today than where we were just about a month or two ago. So is that another sign of a recession? Possibly because one other piece of, well, some good news for a recession is usually we see mortgage rates and rates in general, but mortgage rates drop between 1 and 1.5%. So it might be good timing for you on the mortgage front. I'm not telling you to buy a house. I'm not saying to rent. I'm just giving you all the data for you to make a prudent decision if you think homeownership is for you. So my name is Dan Frio. I do this report every day. I'm a mortgage broker. I am federally chartered, meaning I can help anywhere in the country. So if you're in New York, you're in Puerto Rico, you're in Hawaii, you're in Florida, you're in California, we'd love to help you. So if you're looking to build, buy, refinance anything, please reach out to us. We'd love to give you a quote, at least educate you on the mortgage process and what the best program is for you guys. So please check us out at therateupdate.com. My name is Dan Frio. I do this every morning. Thanks for watching. God bless, and I'll see you tomorrow. Bye-bye.